Howard, good to have you.
Good to be here. Thank you.
You're welcome. I'd love to start. Just give us some perspective and your thoughts. I don't know how well read in you are on the Bed Bath & Beyond saga, but it's strange, to say the least. A company that is really suffering right now, and yet its stock price soars because of a lot of people getting together, perhaps, and deciding to send it higher and squeeze the shorts. And then you've got Ryan Cohen refiling a D for no apparent reason. Any thoughts there in terms of what the SEC might want to look at, if there is anything to look at?
Well, it's an interesting question, and, it's hard to know whether to be more terrified of 10-inch moths or of potential market manipulation and the craziness with the meme stock. I guess craziness is really the best word for it. It's hard to see that as a standard market manipulation case. For market manipulation, you have to show that there is some kind of guiding intelligence behind the scheme, that people are intending to run up the price. This appears, not just Bed Bath & Beyond, but with GameStop and AMC and the other meme stocks before it, to be more of a social craze. It's like we've transplanted the TikTok crazes, the various social media crazes onto the world of investing. And while it's probably not a market manipulation scheme, in some ways it's a little scarier because it shows that we've completely untethered investments from company fundamentals. And I would submit that ultimately that's probably more terrifying than Godzilla-sized moths. Maybe not Godzilla-sized moths, but...
yeah, certainly for those who are short these stocks. But, I wonder, do things need to change in terms of the way we look at these things? Because, yes, it wouldn't seem to fit the definition, as you describe it, of market manipulation. But if there are people on chat rooms who are getting together and bringing together other people to sort of participate in some sort of group project, so to speak, as we saw in GameStop some time back, and as we potentially have seen here, is that not something that the SEC should be looking at?
Well, you've raised an interesting point, and that's the question of whether or not a scheme that damages market integrity, even if it doesn't have the element of fraudulent intent behind it, is something that the SEC should regulate. And the SEC is very concerned about this. They're concerned about structural aspects of the market, that capital is being allocated to companies that could actually use it effectively rather than companies that have the best social media campaign. But it's difficult. We've developed this vocabulary for dealing with market problems that is centered around the idea of fraud and intent and deliberate conduct that is designed to pump up something for no other reason than to make money on it and then dump it at the earliest opportunity so other people suffer. But with the meme stock phase, we're seeing something qualitatively different from that. We're seeing equity ownership as a form of social identity. And I don't think that our market structure regulations are really set up to deal with that.